Before we dive in, I just want to give a huge thanks to Bill Cara for all his work on the Global Markets Navigator.
Oh, absolutely.
You can find more of his insights at billcara.com.
A treasure trove of information over there.
It really is. And this week, we're taking a closer look at week #6 of the Navigator.
Yeah.
And kind of comparing and contrasting it with week #5
Right.
to see what we can learn about the global markets.
Yeah, it's fascinating to see how these 2 weeks kind of play off of each other, right?
Yeah.
You know, we see some shifts in sentiment, some potential opportunities reveal themselves.
Exactly.
For instance, week #6 shows generally a stronger performance in global stock markets compared to the previous week.
You definitely saw that.
But there are some exceptions and nuances that I think are worth exploring.
Absolutely. For example, we saw India and Taiwan dip a little bit this week.
Right.
But then you've got Hong Kong surging over 7% growth, which is incredible.
It is. And you know what else is interesting is that 7 other global indexes saw gains of over 2%.
Yeah, that's a really good point.
It really highlights how interconnected everything is, right?
Totally.
What happens in one part of the world can definitely ripple through your portfolio.
100%, even if you're not directly invested there.
Exactly.
Yeah, which again reinforces that idea of a globally diversified portfolio.
It does indeed.
So smart. So now let's shift our focus to the U.S. market a little bit.
Okay.
Bill Cara points out the continued dominance of what he calls the Magnificent Seven.
Yeah.
The tech giants, Apple, Microsoft, Amazon, Meta, Alphabet, NVIDIA, and Tesla.
Right, right.
But he also raises some interesting questions about the potential risks and opportunities
He does.
associated with this concentration of power.
Yeah. And it's interesting to think about this in a historical context.
Yes.
Bill Cara draws a parallel to the 1950s and 1960s.
So interesting.
When companies like AT&T and General Motors held a similar sway.
Right.
And while this concentration can drive significant market momentum,
Of course.
it also raises concerns about overdependence on just a handful of companies.
Yeah, it does make you wonder, is it wise to ride this wave? Or is diversification into other sectors a safer bet?
That is the question, isn't it?
It really is. So speaking of sectors, Bill Cara notes the strong performance of dividend-paying stocks this week. But he suggests this could be a sign of a toppy market.
Meaning?
Meaning that prices might be reaching a peak.
Oh, I see.
Which, for those of you familiar with sector rotation, this could be a signal to start thinking about moving away from certain sectors, like consumer discretionary and staples.
Okay.
And maybe looking more towards things like materials.
I got it. And, it's not just about broad sectors.
Right.
Individual company stories can offer some valuable lessons, too.
Oh, for sure.
Take, for example, Applied Materials, Virtue Financial, and Palo Alto Networks.
Interesting.
All 3 of them exceeded earnings expectations this week.
Wow.
But their stock prices actually fell.
Huh. Why is that?
Because of softer future guidance.
Oh, so it's not just about, the immediate.
Exactly.
It's about what's coming down the pipeline.
It really underscores the importance of analyzing a company's long-term prospects.
Right, and not just reacting to those short-term blips.
Exactly. Now let's shift gears a bit.
Okay.
To a broader issue that's been impacting global markets. Trade tensions.
Ah, yes. The tariffs.
Yeah, Bill Cara spends a lot of time unpacking the potential ripple effects of these policies.
He does, and he highlights how new tariffs on Chinese goods, steel, aluminum, and even Mexican produce are going to impact a whole range of sectors.
Right.
He specifically points to potential disruptions in supply chains for industries like vehicles and airplanes.
Which rely heavily on global trade, of course.
Exactly.
And what's really fascinating is that these trade disputes have real consequences,
Yeah.
not just for, big businesses and economies, but for individuals too.
Absolutely. He even shares a story about Canadians choosing not to buy U.S. produce.
Even when it's cheaper.
Even when it's cheaper, because of the tariffs.
Wow, that's really interesting.
It really highlights how economic decisions aren't always driven by pure logic, right? Sometimes personal values and political considerations come into play.
Absolutely. It underscores the fact that these trade wars have a human cost.
They do.
And they can really affect,
Yeah.
Prices, consumer choices, and ultimately people's wallets.
For sure. So let's shift our focus now to international markets.
Oh, okay.
Bill Cara provides some great insights, starting with Germany.
Ah.
Interesting. While the German stock market continues to be strong, he does point to some potential political instability
Because of the...
because of a likely snap election.
I see.
So it's a good reminder that politics and economics are very closely intertwined.
They are.
And sudden shifts in the political landscape can have a huge impact on investments.
Absolutely. Then there's the Netherlands, which presents kind of a mixed bag.
Oh, how so?
Well, the market turned bearish last July,
Okay.
experienced significant losses in the second half of 2024.
Oh,
But its RSI momentum is showing a recent bullish trend.
okay. So a little bit of a tug of war there.
And James,
It really highlights the need to carefully assess each market's unique dynamics, right?
you can't just have a cookie cutter approach.
No, you can't. Not in today's global landscape.
Nope.
So very important. And then he touches on Chile, which has had this amazing bullish momentum since the fourth quarter of 2000,
Okay.
but might be at a turning point.
Interesting.
Again, it's all about recognizing those subtle signals and adapting your strategy.
Right.
And then, of course, we have Argentina,
Yeah.
where the stock market index turned bearish back in January and remains weak.
Which goes to show that even within a region, you can have wildly different market behaviors.
You really can.
That's true.
And Latin America as a whole is a really compelling case study.
How so?
Well, Bill Cara discusses the opportunities and the challenges of investing in this region.
Okay.
He mentions things like economic uncertainty, market concentration, and significant risks in countries like Venezuela and Ecuador.
Right.
But he also highlights the growth of fintech in Latin America. He uses Mercado Libre as a prime example, which is just a fantastic illustration of how, even in challenging environments, you can find pockets of innovation and growth.
You can.
And for those of you looking to tap into Latin America, he recommends sticking with companies that meet the listing requirements of the NYSE or the NASDAQ.
Makes sense.
You know, it adds an extra layer of scrutiny
Right.
and due diligence and ensures that you're investing in companies with strong governance and transparency.
Good advice.
It is. And for those who want to delve even deeper,
Yes.
he points to resources like investing.com and finviz.com.
Great resources.
They offer detailed information about international markets and ETFs.
Wonderful. So before we jump into the future of global markets, let's just quickly recap
It's a good idea.
what we've covered so far.
Okay.
We started with a broad overview of global market trends, right?
We did.
Emphasizing how interconnected these markets are
Yes.
and how shifts can really impact your investments directly.
Absolutely. Then we explored a U.S. market.
Right.
Talked about the dominance of the Magnificent Seven tech companies.
Yeah.
The potential risks and opportunities associated with that.
Uh-huh.
And the importance of looking beyond immediate earnings reports.
Good.
We also delved into the impact of tariffs and trade wars,
Yes.
using some real-world examples to illustrate the consequences.
Right. For businesses, for economies, even for individual consumers.
Exactly. And finally, we went on a journey through some key international markets,
We did.
showcasing the unique opportunities and challenges each one presents.
It's a diverse landscape out there.
It is. And it requires a very tailored and nuanced approach to global investing.
It certainly does.
So what does all of this mean for investors like us who are trying to navigate these complex markets?
That's a big question, isn't it?
It is. Well, we'll explore that in part 2 of our deep dive,
I can't wait.
where we unpack Bill Cara's insights into the future
Right.
and offer some practical strategies for navigating this ever-changing landscape.
Sounds good.
So stay tuned.
We'll be right back. Welcome back. So as we look ahead to the future of global markets, there's one thing that's clear.
What's that?
Uncertainty reigns supreme.
Yeah, Bill Cara doesn't mince words.
None at all.
Geopolitical events are really shaking things up right now,
Absolutely.
making predictions tough.
It is hard to get a clear picture.
It is. But he does offer a strategy to help navigate these uncertain times.
Okay, I'm listening.
DCA or dollar cost averaging.
Right. So for our listeners who might not be familiar with this approach, DCA is essentially investing a set amount of money at regular intervals, regardless of what the market's doing.
Interesting. So you're not trying to time the market.
Exactly. You're taking the emotion out of it.
Gotcha.
You're consistently buying in, averaging out your purchase price over time.
Makes sense.
Yeah.
And that can be really helpful when markets are volatile like they are now.
It can. It prevents you from making those rash decisions
Right.
based on fear or greed.
Yeah. I can see how that would be beneficial. It's a very disciplined approach.
It is. And Bill Cara is a big advocate for discipline.
He is. But I do have a question.
Go ahead.
Wouldn't DCA also mean potentially missing out on gains if the market keeps going up?
That's a fair point. There's always a trade-off, right?
Right.
While DCA can help mitigate losses during downturns, it might also limit your gains during periods of sustained growth.
Okay.
So it really depends on your individual risk tolerance and your investment goals.
That makes sense. Some investors might prefer the steady, more predictable approach of DCA,
Exactly.
while others are willing to take on more risk for the potential of those higher returns.
Exactly. It's about finding the right balance for you.
Right. Bill Cara also emphasizes the importance of staying informed, though,
Of course.
and adapting your investment strategy as the global landscape shifts.
Right, because what worked in the past might not work today.
Exactly. So flexibility is key.
Absolutely. He says knowledge is power, especially in today's fast-paced markets.
It really is. You need to be an active participant in your financial journey.
Right, not just a passive bystander.
You can't just set it and forget it.
Nope. You got to stay engaged.
And he provides a ton of information in the Global Markets Navigator.
He does.
But he encourages readers to go beyond just absorbing the data.
Meaning?
He wants you to question things, to explore, to develop your own informed perspectives.
Right. It's not about blindly following someone else's recommendations.
No, it's about empowering yourself to make smart decisions.
Exactly. And that's so crucial because we're constantly bombarded with information these days.
Yeah.
It's up to us to filter through it all.
Right.
Identify what's truly relevant.
Yes.
And use that knowledge to make good investment choices.
And that's where Bill Cara's insights can be so valuable.
Absolutely. He helps you cut through all the noise.
He does.
Yeah.
And focus on the factors that really matter.
Exactly. And he's not afraid to challenge conventional wisdom.
Oh, like what?
Well, for instance, he points out that the Dow 30,
He often considered a benchmark for blue chip companies.
right, has actually seen 57 changes in its components since it was created.
Really? I didn't realize that.
It's true. It reminds us that even those seemingly stable indicators can evolve over time.
That's fascinating.
And we need to be aware of those shifts.
We do, to make informed decisions.
Exactly. It all reinforces the idea that continuous learning is essential.
100%.
You got to stay curious, got to be adaptable,
Yes.
and willing to adjust your understanding of the market as new information emerges.
So true. He also provides some really practical advice for international markets.
Oh, like what?
For example, when investing in Latin American companies, he recommends sticking to those listed on the NYSE or NASDAQ.
Interesting. Why is that?
Well, it helps ensure a certain level of transparency
Right.
and regulatory oversight,
Gotcha.
which can mitigate some of the risks associated with investing in emerging markets.
Makes sense. It's an extra layer of scrutiny.
Exactly. That can give investors more peace of mind.
For sure. And he provides some great overviews of specific markets, too.
He does.
Like Germany, the Netherlands, Chile, Argentina.
Yeah, he highlights their unique characteristics and potential pitfalls.
Yes, he really dives into the details.
He does. Their economic landscapes, political climates, key industry sectors.
It's a comprehensive picture.
It is.
Mm.
And he emphasizes the importance of understanding Forex,
Foreign exchange.
right, when investing internationally.
Especially for those with larger accounts.
Yeah, because currency fluctuations can significantly impact returns.
Absolutely. It's a crucial factor to consider.
It is. It's like adding another layer of complexity.
It does.
But it's essential for making informed decisions.
It is. Now, one thing that really stands out about Bill Cara's work is his passion,
Yeah.
empowering individual investors.
He really wants to give people the tools and knowledge to take control of their financial future.
Exactly. He
Mhm.
wants you to outfox Wall Street, as he puts it.
I love that. He doesn't want you to just follow the herd.
No, he wants you to be a savvy, independent investor
Right.
capable of making your own decisions.
That align with your goals
Yeah.
and your risk tolerance?
Yeah, exactly. And it's evident in everything he does.
It is. He shares his own watch lists,
Mm-hmm.
portfolio ideas,
Right.
not as prescriptions,
No.
but as starting points for your own research.
Exactly. It's a framework, not a rigid set of rules.
Right. And he stresses the importance of understanding the nuances of value versus growth investing.
Which can be tricky.
It can,
Mm,
because those categories can shift as market dynamics change.
they can. A company that might be considered a value stock today could be a growth stock tomorrow.
Exactly. And vice versa.
It's about being adaptable
Right.
and understanding the underlying forces at play.
He even presides a primer on options trading
Oh, wow.
for those who are looking to kind of enhance their trading skills.
That's interesting. But he's very clear about the risks.
Oh, absolutely.
Yeah,
He highlights both the potential rewards and the potential pitfalls,
right.
emphasizing that options are not for the faint of heart.
They're not. You need a deep understanding of the market.
You do. And a disciplined approach to risk management.
Absolutely. It's not about gambling. It's about using sophisticated tools strategically.
Exactly. And speaking of risk, he provides a really interesting analysis of the CBOE options equity put call ratio.
Right. which gives us insights into current market sentiment.
Exactly. So a low ratio, like we're seeing now at 0.46, suggests a bullish sentiment.
It does.
But he cautions that it could also be a sign of a stretched bull market.
Meaning
prices might be getting ahead of themselves.
I see.
So even in a seemingly strong market, there are always potential risks to consider.
Always. And he also delves into mutual fund investing.
Oh, interesting.
Discussing the pros and cons.
Yeah.
Even shares some of his own strategies for evaluating fund performance.
It's like he's opening up his playbook.
He is.
Giving you a glimpse into his own decision-making process.
Exactly. And we haven't even touched on the special interest topics he covers.
Right, like AI, technology.
Uranium. He explores all of these areas with the same depth and insight.
He does.
Those are deep dives in themselves.
They are. We'll have to explore those another time. Absolutely. But before we wrap up this part,
Yes.
let's take a step back and consider some of the recurring themes we've seen
Good idea.
in Bill Cara's insights.
Right.
He consistently emphasizes three key principles:
Which are?
independent thinking,
Okay.
continuous learning, and discipline and patience.
I like it.
He urges investors to break free from the herd mentality,
Right.
to do their own research,
Absolute.
understand the risks involved, and make informed decisions.
That align with their own financial goals.
Exactly. He encourages continuous learning
Yes.
because the market is constantly evolving.
It is.
Staying ahead of the curve requires that commitment to education and adaptation.
Couldn't agree more. And finally, he stresses the importance of discipline and patience.
Yes.
Reminding us that investing is a marathon, not a sprint.
It's about the long game
Exactly.
Yeah.
And success requires that long-term perspective.
and the ability to withstand those short-term market fluctuations.
It does. These principles form the foundation of his investment philosophy, and they provide a valuable roadmap.
For anyone looking to navigate today's complex markets.
So true. Welcome back to our deep dive into Bill Cara's Global Markets Navigator. In this final part, we'll explore the heart of his investment philosophy, and uncover those golden nuggets of wisdom that can help you thrive in today's intricate market landscape.
One of the things that really strikes me about Bill Cara's approach is his unwavering belief in the power of independent thinking.
Yeah, he constantly challenges his readers to question the narratives we often hear from big financial institutions,
Right.
and encourages them to develop their own well-informed perspectives.
He's not afraid to point out that those institutions often have their own agendas,
Right.
which may not always align with the best interests of individual investors.
The good point.
He encourages readers to take ownership of their financial journey
Yes.
and not just blindly follow the recommendations of others.
Absolutely.
It's about empowering yourself to become a more informed and confident investor.
And he doesn't just talk the talk.
What do you mean?
He walks the walk, too. He even named his yachts Dream Merchant and Time and Space,
Really?
symbolizing his journey from working within the system to achieving financial freedom and independence.
Wow, that's powerful.
It's a testament to his belief in the power of taking control of your own destiny.
It really is, and he genuinely wants others to experience that same level of freedom.
He does.
His work is a testament to that commitment.
Absolutely.
He provides a wealth of resources, from detailed company analyses to insightful sector breakdowns.
Yeah, and he's constantly updating his navigator to reflect the latest market developments.
It's amazing. And he even shares his own watch lists and portfolio ideas.
He does?
Not as prescriptions, though,
Yeah.
but as starting points for further research.
Right, and due diligence.
Exactly. He emphasizes that these lists are dynamic and subject to change based on market conditions and evolving company fundamentals.
It's not a set it and forget it kind of thing.
No, it's not. And he also stresses the importance of understanding the differences between value and growth investing,
Right.
recognizing that these categories are not static.
They can shift as market dynamics change.
Exactly. A company that looks like a value stock today could transition into a growth stock tomorrow.
And vice versa.
Exactly.
Yeah.
It's about recognizing those shifts and adapting your investment strategy.
That's all about adaptation.
What I find particularly helpful is how he explains these concepts in a way that's easy to understand,
Yeah.
even for those who might not have a deep background in finance.
He has a knack for making complex topics accessible.
He really does. Now, another cornerstone of Bill Cara's philosophy is discipline and patience.
Oh, absolutely.
He reminds us that successful investing is a long game,
Right.
and those who chase quick profits or panic during market downturns often miss out on the biggest opportunities.
It's about playing the long game.
It is. He advocates for a strategic approach
Yeah.
where you carefully consider your goals, assess your risk tolerance, and develop a plan you can stick to.
Even when things get bumpy.
even when the market gets turbulent. He reminds readers that time is on their side when it comes to investing.
Time is your friend.
It is. He also stresses the importance of diversifying your portfolio.
Of course.
He believes that global diversification is essential in today's interconnected world.
Makes sense.
And he provides some great guidance on navigating international markets.
He does.
This approach can help mitigate risks
Right.
and potentially enhance returns by spreading your investments across different regions and asset classes.
That's a smart strategy.
It is. One of the most valuable pieces of advice Bill Cara offers is to understand the difference between price and value.
Right.
He points out that a stock price is just a number,
It's true.
constantly fluctuating, but a company has underlying fundamentals
Yeah.
that determine its true worth.
He urges investors to focus on those fundamentals.
He does, to look beyond the hype
Right.
and to seek out companies with strong management, solid financials, and a competitive edge.
Value can often be found in unexpected places,
Why?
especially when market sentiment is low.
That's interesting.
It's about being patient, doing your due diligence, and being ready to seize opportunities.
When others are fearful.
Exactly. That contrarian approach can often lead to significant gains over the long term.
That makes sense.
Yeah.
Bill Cara also provides some incredibly practical tips for navigating the market.
Like what?
For example, he recommends utilizing tools like FinViz
Right.
to quickly filter and identify securities that meet specific criteria.
It's a great tool.
He's also a master of technical analysis, using indicators like RSI and MACD to gauge market momentum
Right.
and identify potential entry and exit points.
What I appreciate is that he doesn't just tell you what to do.
I know.
He explains the reasoning behind it,
He does?
so you can understand the logic and apply it to your own analysis.
Absolutely.
Mm-hmm.
He also emphasizes the importance of managing risk.
Of course. You got to protect your downside.
You do. He encourages readers to develop a comprehensive risk management strategy, including setting stop-loss orders.
To limit potential losses.
Exactly.
Yeah.
And understanding the leverage inherent in certain investment vehicles,
Like options.
right? He stresses that even the best trades can go sour.
They can.
And having a plan in place to mitigate those losses is crucial.
It's essential for long-term success.
It is. He advocates for a proactive approach to risk management,
Right.
not just reacting to losses after they occur.
You got to stay ahead of the game.
So as we wrap up our deep dive into Bill Cara's Global Markets Navigator,
Yeah.
I think one of the key takeaways is this: knowledge is power.
Couldn't agree more.
He truly believes that informed investors are empowered investors.
Absolutely.
And he's dedicated his work to providing his readers with the tools and insights they need to take control of their financial future.
He's a true champion for individual investors.
He is. He challenges you to think critically, to question assumptions,
Right.
and to never stop learning.
It's a lifelong journey.
It is. He reminds us that investing isn't just about numbers. It's about understanding the forces that drive those numbers,
Exactly.
from global events and economic policies to investor sentiment and technological advancements.
It's a complex ecosystem.
It is. Bill Cara's Global Markets Navigator is more than just a weekly market review.
It's a roadmap.
It is. For navigating the complexities of today's financial landscape and achieving greater financial freedom.
We highly recommend you check out his work at billcara.com.
Yes, he offers a wealth of information and resources.
He does, for investors of all levels.
As Bill Cara himself says,
Let's hear it.
discovering Bill Cara is more important to investors than finding a great stock investment.
Wise words.
They are.
Yeah.
And on that note, we'll wrap up this episode.
Thanks for joining us.
We hope you found it insightful and empowering, and we encourage you to continue your journey toward becoming a savvy, independent investor.
Be sure to visit billcara.com for more invaluable insights and resources.